I made just around $7,000 trading GBP USD. And in this video, I'm going to break down the entire trade. And I'm also going to teach you the entire trading strategy that I used to take that trade. Now, this trade was sent in my Discord server. My members took it and I took it as well. Now, it doesn't mean that I have a 100% win rate. I lose as well, but this was a beautiful trade. I'm going to break down the entire trade so you guys can learn for absolutely free. All I ask in return is a subscribe. And without wasting any more time, let's get on with the video. So let's talk about the strategy itself first. Okay, so trading really comes down to a couple of few things. A lot of people overcomplicate it, but it really is identifying the higher time frame order flow. And the way I identify is whenever I open up a pair, right, I should be able to identify the direction of the market within 3 or 4 seconds. If it takes longer than that, then it absolutely means that the market is consolidating and I'm not sure about it. So I'm going to move on to the next pair. All right. So the very first step is you have to go on to the 4-hour time frame. So that's the higher time frame for this strategy. And for our entries, we're going to use the 15-minute time frame. All right. So first thing is first is that you have to identify the order flow, the market direction. Where is it going? Because if you trade with the trend itself, your odds will be in your favor, like in the start as well. So just identify the direction of the market first. That's step one. Now, all you got to do is mark out key levels, or for our ICT students, we call them PD arrays. So order blocks, fair value gaps, and inverse fair value gaps. I stick to order blocks and fair value gaps for this strategy. All right. So the second step is marking out, order blocks. So when you have an order block on the 4-hour time frame, what you want to do is wait for price to come back down in this 4-hour order block. Now, when it comes down to this 4-hour order block, you have to go to the 15-minute time frame. And now the third step, this is very important and the meats and bones of the strategy, and that is SMT divergence inside or at the PD array. So when price reaches this PD array, we look for a correlating pair or asset to look for SMT divergence. All right, this is very important. So let's suppose that this is Euro USD, right? This price section is Euro USD, and over here what we have is GBP USD. Okay, now let's just do this. Okay, perfect. Let's just do this. Cool. So now over here, what you can see, and that is on the 15-minute time frame, is when price reached the PD array, we created this low, but over here we created this low and we had another lower low. So lower low, lower high, lower low. But over here we have a lower low, lower high, and we didn't make any lower low again. So that is SMT divergence. Okay. Now we want to be trading the pair that is stronger. This one right here, that is stronger towards bullish momentum. Okay, this one is weaker. Why? Because price is trying to go down here and there are a lot of pressure that is pushing the price down. So hence this pair is not strong, being bullish, if that makes sense. All right, but this one here that didn't make the lower low is the one that we should be trading. Now, how do you actually take this trade? We look for change in the state of delivery. All right, so what you have to do is look for, when you have SMT, a successful SMT, right, where you have lower low here, but you don't have lower low here, you have to look for a liquidity sweep. So look for this move down from here, right? See if it swept some form of liquidity, right? So let's say that there was a, let me zoom in a bit. There was a low here, a short-term low, right? And price swept it, right? So look for consecutive bearish candles that swept that liquidity, right? And you want to mark out the top, the body of the top candle of those consecutive bearish candles. So consecutive bearish candles that sweep liquidity, or it could be one, but let's suppose that there are consecutive bearish candles, just like an order block. Now, all you're waiting for price to do is just close above the body of the order block, but not above the high, if that makes sense, because that's how we get in the trade quicker and faster. And the chances of missing out on a trade are very less. So when we have these consecutive bearish candles, we wait for price to close above the body of the first candle of the auto block. This is very important. All right. So over here, when we have a sweep, price closes above it, right? And we take our entry on the retest of that order block, right? Down close candle. It could be singular or it could be consecutive candles. Now, what I like to do is I choose the candle that swept liquidity, right? So I forget about the auto block, but I choose the candle that sweeps the liquidity, the exact candle. And when price closes above the body of that candle that swept liquidity, that is my auto block for this strategy. I get it even quicker. So I don't wait for the entire auto block to be, inversed. I just wait for, just a small change in the state of delivery, which gets me in the trade even quicker. So when price closes above, you take your entry and you go for 1 to 2 or target some sort of buy side liquidity. It really is the simplest and the easiest model one you can trade. All right. Now it would be the same case if you had a fair value gap here. Okay. It really comes down to identifying the order flow, trading with the trend, then marking out key levels, and then looking for SMT divergence. That is an extra confirmation, and it is the mandatory confirmation, okay? Because you can get a lot of fake outs, but SMT divergence confirms that there is some sort of manipulation going on, and that's how you take the trades. You're gonna understand all of it when I show you the example, so don't worry if you are still not unsure about what I've taught you. Also, I'm going to break down the entire trade that I took later on in the video. So make sure you stick around because this is going to be very, very informative video. All right, everybody. So here is the trade breakdown that I sent in the Discord and the one that I took personally. So like within 4 seconds, and I'm not even talking like 10 seconds. Okay, within 4 seconds, I was able to identify the market direction because it was clean. It was not consolidating. It was not confusing me. It was not making me, think twice that whether the market is going up or down. It was just straight up going up. Okay, so my odds of winning like initially increased because I was trading with the trend. So now price reached into this auto block here. This is a PD array. Right? And what else do we have here? We have these very clean equal highs resting just around here. Now, when price tapped into this auto block, so what I'm going to do is going to do 15-minute time frame, right? And we had SMT from here to here. Okay, so let me just go to Euro USD and show you guys. I'm going to go here, Euro USD, and I'm going to scroll right here. Okay, perfect. So just around here, you can see, okay, actually it's from here to here. So where is the SMT here? We made a lower low on Euro USD, but we made a lower low, lower high, and we failed to create another lower low on GBP USD. Now notice this bearish candle. So now we have SMT. Let's go zoom in. Notice this bearish candle over here. This bearish candle swept this short-term low. All right, so this becomes my auto block and the candle that would then present me with a change in the state of delivery. So over here, what you can see is that we closed above this candle. So that is change in the state of delivery above the body of this candle. Now, the entry was simply on the retest. Stop went here, right? Actually, it was not here. Let me just adjust it accordingly. Somewhere around here, okay? And it was a 1 to 2, like 1 to 2.5 kind of trade. So this is how it played out. Boom, literally like very little drawdown, okay? Yeah, so that's the entire trade breakdown, guys. There's nothing fancy going on here, just SMT at the key levels, trading with the trend. And we are trading this pair because it was stronger. It failed to create lower low. So it was weaker in terms of being bearish and it was stronger in terms of being bullish, right? So that's the entire theory behind it. So now I'm going to give you 1 or 2 examples and then I'm going to end the video. All right, guys. So here is another example and I'm looking at gold here. So we have this fair value gap. All right. You can see it right here and price taps into this fair value gap. Okay. Now I'm not going to take an entry right away. The rules that I've mentioned before is that we look for SMT on the lower time frame with a correlating asset or pair. Okay, this is very important. So now, if I go down to the 15-minute time frame, right? Let's just remove this. and I choose silver, which is the correlating pair for gold, right? Now inside this fair value gap, we have to look for an SMT. So over here, what you can see is we create an SMT with this low over here. So on silver, we took out this low, but on gold, we failed to take out this low. Now, we look for a change in the state of delivery. And as I said before, that I use singular candle to get in even faster. So this specific candle swept this short-term low. So now if the candle closes above the body of this candle, I'm gonna take my entry on the retest. Simple as that, okay? Now this right here is my entry, right? Basically just right here, right? And we can target this high over here or just go for 1 to 2, okay? Very simple stuff. And let's just keep this here, right? We get 1 to 2. Very simple stuff, guys. Just trading with the high time frame trend, waiting for price to come into some form of PD array, and then we'll look for SMT divergence inside or at the PD array. It's very simple stuff. Yeah, it's just like you don't have to overcomplicate trading. Okay. Yeah, so that's pretty much it, guys. I hope by now you guys have understood the strategy. So that would be it. Thank you guys so much for watching. If you want to watch videos about daily bias, I'm going to link them down in the video's description. Make sure you watch them if you want to learn how to identify daily bias. I'll see you guys in the next one. Goodbye.